Hello everybody and welcome to this video where we'll be running over the top 5 software companies. So today we have selected some very interesting ones. As you saw in the introduction, we have Microsoft, we have IBM, we have Salesforce, we have Oracle, and we have SAP. All of these are competing against each other on various areas. Microsoft, IBM, and Salesforce maybe a bit more, and then you have Oracle and SAP who is competing a lot on the ERP business. First, we obviously want to understand whether these companies are in an uptrend or a downtrend, and we can take a look at the most recent periods and how the stocks have been performing. And as we can see, year to date, Microsoft has gained 36.11%, IBM down with 12.44%. They just announced quarterly result yesterday, which actually met expectations both from EPS and revenue perspective. However, the stock still got slaughtered due to having the lowest revenue ever for IBM, and they are in a little bit of a small crisis. Then you have Salesforce, year to date 57.38, really good. Oracle, small but acceptable, 12.78%, and more or less the same with SAP on 12.44%. Next, we want to take a look at the income statement. And first we can take a look at the net income part, and we can see all the companies are earning a lot of money, so that's really good. If we take a look at the net profit margin for the last 12 months, we can see that Microsoft is definitely the best with 30.96%, closely followed by Oracle on 26.13%. A little bit less good for SAP on 16.42%. CRM, the next with 12.21%, and then IBM with 10.43%. I think what is important to state here is on the color scheming, even though IBM is 10.43 and it's green, and CRM is 12.21 and it's red, it is because they belong to different sub-industries and they're not benchmarked against the same numbers. So IBM is actually doing quite well within their industry, but Salesforce is not doing so well compared to their sector. We can also take a look at the Beanish M-score, which is just a mathematical model that determines whether a company has manipulated profits. We want this to be below minus 2.22, and we can see all companies are living up to that. Okay, a small minus 2.17 for Salesforce, but that is acceptable. On the Sloan ratio, it's another way to identify if substantial parts of earnings are non-cash accruals, which we're not interested in. We want this number to be between minus 10% to 10%. And we can see all companies, with the exception of IBM, are doing fine from this perspective. So here in the overall ranking, we first looked at the trend of these stocks, and what we could see was that Microsoft, Salesforce are in uptrend, Oracle is more going sideways, maybe a small uptrend, while as IBM and SAP are in a downtrend. And that is pretty clear from the numbers that we saw, but also if we take a look at the simple moving averages for the last 50 days, 100 days, 200 days. Next, the net income part, all of them were earning money, so that was really good. Net profit margin wise, Microsoft and Oracle was by far doing the best, followed by SAP, Salesforce, and IBM in the end. Next, we move into the return metrics, and we want to understand how high returns and cash flow margins is being generated. First, we can take a look at the return on invested capital. Here we can see that Microsoft doing really well with 26.02%, much better than the second one, which is Oracle on 13.24%, SAP 7.11%, IBM pretty poor here with 4.17%, and Salesforce the worst with 1.17%. Next, the delivered free cash flow margin, another important ratio. Again, Microsoft doing by far the best with 31.63%, though closely followed by Oracle on 29.27%, around 17 to 18% for IBM and Salesforce, and SAP the worst with 13.77%. However, I would say in general the numbers here are looking quite good for all companies. It's just that Microsoft and Oracle are by far doing the best. Next, very important section for these type of companies is the balance sheet and ratio, and we want to understand how strong the financial position is of these companies, and we will come into that why this is very important. First, we can take a look at the current ratio. Here we want this to be above 1. All of the companies are living up to that. On the cash ratio, we would like to see above 1. Microsoft and Oracle are living up to this. None of the others are, so that is a small red flag. Not a major one, but a small red flag. And the primary reason is that some of these companies are really growing their business through acquisitions. Microsoft have done tons of them over the years. And most recently, they bought Zenimax for around 7 or 8 billion, and this is to strengthen their position in the gaming market. They obviously have the Xbox, which has been more or less successful compared to Sony, PlayStation, and some of the other consoles. And Microsoft believes with this acquisition that they can really strengthen their position. So just to know, they did an acquisition of around 8 billion, but they still have, or they have at the moment, around $137 billion in cash. So they can definitely do more acquisitions if they wish to do so. They can pay out additional dividend. There's so many ways of using this kind of money for the greater good, and it's one of the reasons that I really like Microsoft, because they are just a cash cow in the end of the day. You can also take a look at the total assets versus total liabilities. We want this to be above 1.5, and we can see Microsoft is good, IBM a little bit bad here with 1.15, Salesforce really well with 2.99, Oracle a little bit bad with 1.1, and 1.92 for SAP. In general, I would say that the numbers here are a little bit better, than in general, because they are software companies. They don't tie up a lot of their business into fixed assets. So in general, I think the numbers are quite okay. I don't have any concerns in general. On the debt equity part, Microsoft really well, IBM small red flag with 2.68, Salesforce really well with 0.07. Surprising red flag here for Oracle and 6.68. I hadn't seen that coming, but I would say, looking at all the other numbers, I am not too concerned about this number. However, it's definitely something that I would like to go down for Oracle. SAP, which is a comparable company to them, only has 0.5. So again, there's a huge discrepancy between these two companies. We can also take a look at the Element Z score, which is just a credit strength test that assesses the likelihood of bankruptcy. We want this to be above 1.8, and we can see all companies are in the safe zone. On the Piotrowski score, it's just another way of assessing the strength of the financial position. We want this to be equal or above 5, and all companies are living up to that. So in general, I would say the balance sheets of these companies are looking quite okay, but a company like Microsoft is still really standing out. So back to the general overview. We first took a look at the return on invested capital. Microsoft was doing the best, followed by Oracle, SAP, IBM, and Salesforce. On delivered free cash flow margin, again, Microsoft and Oracle was doing the best. We also took a look at the total ratio, not as important for these type of companies, but Salesforce doing the best, followed by SAP, Microsoft, IBM, and Oracle. And on the debt equity ratio, Salesforce again doing the best, followed by SAP and Microsoft that had the same, and IBM scoring the worst together with Oracle. We then move into the shareholder yield, and we want to understand how much value is returned to shareholders either through dividend and or buyback yield. So if you first take a look at the dividend yield, a small 0.93% on Microsoft, nothing noteworthy. Really good number or high number for IBM on 5.53. I guess it's one of the sales point for them, especially for investors that are interested in dividend stocks. Salesforce do not pay out any dividends. Oracle, small 1.59%, and SAP 1.15%. So no huge dividend players with the exception of IBM. On the buyback yield part though, compared to the S&P 500 Q1 average, Microsoft doing fine here with 1.33%. IBM has a small one at 0.44%. Salesforce has issued equity, so they have a minus here. Oracle, a very, very high 9.99%, so a really high number, surprisingly. And SAP, a small, nothing noteworthy, 0.32%. So then we can take a look at the total shareholder yield again, looking fine for Microsoft, 2.26, 5.97 for IBM, minus for Salesforce, obviously, a really high 11.58% for Oracle, and SAP on a small 1.47%. Again, we obviously, as per usual, want to understand whether this is sustainable in the future, so we take a look at the modified payout ratio that shows the proportion of earnings that are paid to the shareholders in the form of dividends and a buyback. We want this to be below 100 because that means that there's room to grow this even further. Microsoft on the safe side, the same with IBM, looking quite fine here. Oracle 204.65%. So again, this is not sustainable, but I would say they could easily cut some of the buyback and then they would go down to a safe zone. So I would say they actually still have a relatively attractive yield. And SAP only on 49.56, so they also have room to pay out more in dividend and a buyback if they wish to. Then we move into the earnings per share and growth section, and we want to understand whether these companies are expecting to grow in the future. If we take a look at the P ratio, all of them actually look quite attractive compared to the industry that or sector that they are benchmarked against. If we take a look at the earnings per share growth forecast for the next 5 years, Microsoft is expecting a growth on 14.97%, small 2.85% for IBM, 16.72% for Salesforce, Oracle 7.72% and 9.42% for SAP. So again, when they're benchmarked against some of the industry players, it doesn't look too good here. However, I would say some of these are big mature companies, and I actually in general, with the exception of IBM, like the numbers quite a bit. I think it looks quite okay. We can also take a look at the revenue growth for the last 12 months. Microsoft managed to grow. IBM again here, minus 0.42%. So this is one of the red flags that their revenue is decreasing. And as mentioned earlier in the video, that's one of the reasons why their stocks got slammed yesterday. Salesforce, good growth on 28.87%, and small to none growth for both Oracle and SAP here. We can also take a look at the net profit growth for the last 12 months. Microsoft, again, the net profit growth is growing, so that's really good. IBM, another red flag here on 5.38%. Salesforce, amazingly, 584%, really astonishing number, and that is probably one of the main reasons why the stock has managed to go up so much this year. Oracle, surprisingly, down with 4.66%, a bit surprising to me, and SAP has done really well here on 214.51%, again, quite impressive number. Alright, so back to the overall overview. If we take a look at the shareholder yield and my own assessment of which one I find the most interesting from this perspective only, I would say IBM, followed by Oracle, Microsoft, SAP, and Salesforce in the end. IBM is obviously standing out, but that is only from this perspective. If we look at the next numbers for the earnings per share growth forecast for the next 5 years, IBM is doing the worst. Salesforce, Microsoft are doing the best. More or less similar story on the net profit growth. Salesforce doing the best, followed by SAP, Microsoft, and IBM is doing the worst. So again, taking a look at all the numbers here, it is by no surprise that IBM has struggled a bit on their share price. Their revenue is down, they're not that profitable. Again, it's not just a compelling case compared to some of the others. The final section is to try to understand whether these companies are currently under or overvalued, and there's different ways that we can do that. One way is to look at the PEG ratio. If that is below 1, according to Peter Lynch, the companies are considered undervalued. If they're above 1, they're considered overvalued. And as we can take a look across the board, all companies from this perspective are considered overvalued as of today. You can also take a look at my estimated intrinsic value, which is based on a lot of different numbers and assumptions. And based on my assessment of these companies, I believe there's a small upside on 4.49% on Microsoft. I was quite surprised to see the numbers for IBM turning out to be an upside on 19.87%, so I would take this assessment on a grain of salt when I just look at all the other numbers. But perhaps IBM has been beaten down too much compared to some of the other tech stocks. Salesforce upside on 7.49%, Oracle downside on 7.95%, and a massive downside on SAP on 30.41%. So that's definitely a red flag to me. You can also take a look at the beta ratio, which is just the risk volatility in relation to the overall market. If it's below 1, it is less volatile than the general market, and we can see that Microsoft, Oracle, and SAP follow under that category, while as IBM and Salesforce are a little bit more volatile than the general market. You can also take some other value indicators. One of them is the book value per share, and here if it's above 1 they're considered undervalued, if it's below 1 they're considered overvalued. All companies are considered overvalued from this perspective. You can also take a look at the relative strength index for the last 14 days. If it's below 30, it means it's oversold territory and it may have a reverse upside trend for these companies, while as if it's above 70, it's considered overbought and it may do a pullback. Here we can see all companies are falling in between the two indicators, so there's no clear signal as to which way these stocks will go from this perspective. Last, we can also take a look at what the analyst thinks, and obviously they have their own agenda, so I don't use them blindly, but it's always good to see when your numbers tells a story and that is being backed up by the analyst recommendation. So if we take a look at the consensus price target, which is just the middle ground of all the estimates of the different analysts, some will have high, some will have lower. So it's kind of like a median. They believe that Microsoft has an upside on 4.11%, similar upside as to me on 19.34 on IBM. They have a downside on 4.53% on Salesforce, and they have upside on both Oracle and SAP. So there's definitely differences between my assessment and the middle ground estimates of all the analysts. So back to the overall ranking, we finally took a look at the value assessment of the companies based on several different parameters, and the conclusion to us is that Microsoft and IBM is undervalued. Again, IBM numbers does not look too appealing, so I would put a disclaimer on them. However, the story tells us that based on the assessment that they are undervalued. Salesforce, believe, is quite fairly valued as of today, while as Oracle and SAP seems a bit overvalued. So IBM already announced their quarterly results, and most of the other companies will follow in the next 2 weeks' time. Definitely have some expectations to some of them, while as we are a bit more hesitant with some of the others. However, based on the highest net profit margin of 30.96% in the last 12 months, highest levered free cash flow margin of 31.63% in the last 12 months, a very solid balance sheet that can be used for investment and already has in the last month, proven to be able to reinvent itself over time. It has not been caught in the Kodak or Nokia trap. Attractive valuation and or yield compared to the type of company. We feel that the top pick for us is Microsoft. We would not be concerned, and we may actually enter into a position in Microsoft before the quarterly results, because we have expectation that they will surpass them. The second top pick for us is Salesforce. They are really on an interesting journey at the moment. They're growing their revenue, they're growing profitability, so they look like a quite attractive play as well. IBM, no, we don't really like that. You could pick them for the dividend, but we truly believe that there will be more value in taking some of the other stocks. Oracle and SAP, both fine companies, well run, so we don't have too much concern with them, but again, it doesn't look like there's a lot of value to be gained from them, so that's why we are not putting them on the list. That was all we had for today. Please note that we are not financial advisors and we are doing this solely for entertainment purposes. We hope that you liked the video. Please subscribe for future content, put a comment and a like. Come with suggestions if you want to see any improvements. That's the only way that we can improve the content that we are delivering to you guys. Besides that, not more to say than have a good day and stay safe.